Today is Monday, April 14th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMS Senior Ag Analyst, Alan Bush, ADMS Senior Financial Economist, and Mark Bowman, ADMS Senior Market Research Analyst. And starting with the financial markets this morning, Alan, the last couple of weeks saw crazy volatility in the financial markets, particularly the stock indexes. What do you feel are the best opportunities in the financial futures markets today?
Okay, well, currently the best opportunity, I think, is still in the short side of the U.S. dollar, which has been hovering above three-year lows. Those three-year lows were just recently made. So last week's breakout to under the psychological support level of 100 suggests that additional downside pressure is likely. And it's the euro currency and the yen and then also the Swiss franc that have been the strongest performers against the US dollar. So much of the pressure on the greenback can be linked to prospects of a Federal Reserve that is on track to lower its key interest rate, that would be the Fed funds rate, by 25 basis points 3 times this year. That's the expectation. But just a week or so back, the probability was for 4 rate cuts. So now there's only 3, but yet the dollar is still very much underperforming, which is a sign that there may be some follow-through pressure in the dollar index. So it's the dollar that I think has the weakest fundamentals. Moving over to the S&P and NASDAQ, those two futures gapped higher today, and it remains to be seen whether these gaps are breakaway gaps or exhaustion gaps. Right now, we're getting fairly close to where those gaps first took place, but it has to be viewed as a sign of strength to gap higher from a congestion pattern. Longer term, though, a likely accommodative Fed will provide underlying support for stock index futures.
Yeah, what do you tell the 401k owner, Alan, right now, who's nervous, who, considers going onto the sidelines? I mean, is patience the virtue here?
It absolutely is. And I remember this is an old story about the young stockbroker and the old stockbroker. Young stockbroker goes into the office of the older stockbroker and says, will this bear market ever recover? Will prices come back? And the older broker said, it always has. So I think this is a time to stay with it. Interest rates always dominate, may take a little longer, but that is the fundamental that I think will dominate in the longer term to see stock index futures recover.
Thank you, Alan. Mark Soderberg, what factors will drive prices across the ag space this week?
Well, in all likelihood, tariff news is not going to go away anytime soon, but hopefully the day-to-day volatility caused by the tariff headlines will start to diminish, at least a little bit in the short term. This weekend, President Trump's surprise tariff rollback on smartphones and other electronic devices from China is being warmly received on Wall Street, and I think likely helped support soybean prices here, at least in the early part of the trade. China is still our largest soybean buyer here, and hopefully this may be a step in the right direction and opening up some dialogue between the world leaders of the two largest global economies, and hopefully work towards improved trade relations sometime soon. The Trump administration just continues to tout the number of countries that are coming forward, just wanting to negotiate trade deals. To avoid the reciprocal tariffs, as we're still in the early part of this 90-day pause. So we'll continue to be very sensitive to tariff headlines. Demand numbers also going to be closely watched. We do have a NOPA crush that comes out tomorrow. NOPA members are expected to have processed about 198 million bushels of beans in the month of March, which, if realized, would be the largest for the month of March. The USDA finally raised their corn export forecast last week. We've been looking for a 25 to 50 million bushel increase pretty much every month here over the winter months with no changes being made. They finally caught up with a 100 million bushel increase here last week. Gradually, more and more of the market's attention, however, is going to shift to U.S. weather, and as spring plantings are now upon us. Good rains are expected across the southern plains over the Easter holiday weekend, so that's what's pressuring wheat futures here today as drought conditions have expanded across the hard red winter wheat areas here in the past couple of weeks. So a healthy dose of rain is exactly what they need in that region.
And Mark, after the recent rebound, do you think there's much more upside to corn prices?
I do. In the short term, yeah, we're probably overdue for a little bit of a pullback here. July corn has closed higher now for the 7 consecutive sessions. But with U.S. stocks now down below 1.5 billion bushels, and that's a 3-year low, I think there's a good chance that we're going to see these tighten up even further with a 90-day reciprocal tariff pause on. I think U.S. corn should continue to dominate in the global trade into at least the early part of the summer when the Brazil second harvest will be upon us. Global stocks remain extremely tight despite the lack of buying from China. And we've seen a significant amount of speculative length exit the corn market here in recent months. Friday's CFTC report showed money managers, they were net long just over 50,000 contracts of corn. That's well off the February peak at 365. So I think they're starting to reload here a little bit again. So as mentioned, gradually planting progress will, and the outlook for the U.S. growing season will dominate the market's focus. U.S. farmers are gearing up to plant just over 95 million acres of corn this spring, about 4 million over, almost 5 million over a year ago. However, we're still in the very, very early stages of that. So in the short term, I think old crop corn is going to get some lift back up and challenge that February high right around 520.
Yeah, as you say, it's planting season, and we should start looking at the crop here in the U.S. soon. I mean, we're going to still be watching the headlines, but eventually we have to focus on the crop we're growing, I suppose.
Absolutely. We're getting there.
Yeah. Mark Bowman, looking at the softs briefly, what do you expect from the quarterly cocoa grindings reports?
Okay, so these reports are coming out Thursday. We're going to have first quarter grindings for Asia, Europe, and North America. Last week, the Swiss-Belgian chocolate processor Barry Callebaut reported that sales volume fell 4.7% from a year ago for September through March. And they're expecting a mid-single-digit % decrease for the full year, which is at 5%. So if we apply that reduction to quarterly grindings in general, then Europe could see a drop of 18,000 some odd tons from last year, which would imply about 349,000. Similarly, North America down about 56, maybe down 5,700 to about 108,000. Asia, just for the heck of it, applying a 5% decline implies about 210,000. So high prices discouraging consumption. Processors like Barry trying to pass their increased costs onto the consumers, but the result is lower consumption.
Lastly, Mark, what does today's Unica report tell us about Brazilian sugar production?
So this report came out today. This is the Brazilian Center-South cane crush. This was for the second half of March, which wraps up the 24-25 marketing year. As often the case, we saw an increase of crushing activity as the region emerged from the rainy season. Center-South crush was 4.558 million tons. That was up from 1.861 million in the first half of the March, but down from 5.1 million a year ago. However, sugar production actually was above a year ago, 201,000 tons versus 183,000 a year ago. And this is probably due to the high sucrose levels. And given that, which is not a surprise, given that drier than normal conditions the region experienced over the past several weeks. The sugar share of crops 43% during the second half of March, versus 33.5% for the same period last year. And there were 44.13 kilograms of sugar produced per ton of cane versus 35.86 a year ago. So much more sugar coming out of the cane. Questions going forward, key questions are how much did that extended drought last year and the drier than normal conditions during this rainy season hurt the cane crop. Also, there were these wildfires last fall at the end of which damaged some of the cane crops. So we had some good rains later on in the fall, which kind of turned around those fields, may have set them up for a good crop this year, but we'll have to wait and see how that worked out.
So all in all, the report, bullish or bearish, Mark?
The report was bearish because it came in above last month and above a year ago.
Thank you. Thank you all. Remember, the views and opinions expressed today in this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.